Good evening. My name is Cordia, and this is Insurance Talk Tuesday with CCI Protection, where our mission is to serve, to educate, and to protect. So this week we are talking about the homeowners policy still. Last week we discussed just the dwelling limit, what that coverage is, which is actually coverage A of the homeowners policy. So we talked about the fact that the replacement cost is going to be whatever it takes to rebuild your home as is, God forbid, a total loss situation. So that's our dwelling protection. The other part of coverage A is something called other structures. So let's talk coverage, right? So other structures is going to be anything that's on your land but not physically attached to your home. So if you have a fence, if you have a pool, a storage unit, things like that are going to be covered under that other structure protection. Other structure typically defaults to 10% of the dwelling protection. So you have a $300,000 home. Typically, the homeowners is going to include $30,000 worth of other structure protection. You are able to adjust that. Times when we would adjust that, right? If you have um, an elegant, like extravagant pool in the back and a she shed, you more than likely need more than $30,000 worth of coverage, right? So these are conversations you want to have because it defaults to that 10% or that 30,000 doesn't necessarily mean that that's the limit you need. If you have a lot of things on your property, you have things that you build, other structures, you have, extravagant she sheds in the back, then you want to make sure that your limit is high enough to take care of that. God forbid something happens, right? So let have that conversation. Make sure you know what your other structures limit is and make sure it's enough. Right, so that's coverage A, which consists of the dwelling coverage, which we talked about last week, which again is just what would it take to rebuild your home as is, God forbid, a total loss situation. And we talked about the two evaluations, either replacement cost or actual cash value. So it's either going to give you what it costs to replace it as is, or it's going to give you what it costs to replace it as is minus depreciation. So that ACV versus RCT. And we go into a little more detail in it on the last video, so feel free to check that out. But that is kind of just going over coverage A, which is talking about the dwelling protection, and we're talking about the other structures, which is anything that is on your land but not physically attached to your home. Right? So we'll move to coverage B. Coverage B is our personal property protection. So these are the things that are inside of your home, your contents coverage. If you took your house, you turn it upside down, whatever would fall out is going to constitute your contents coverage. Right? Now, this is usually at like 60% of what the home is. So if it's a $200,000 home, typically it'll default to that $120,000. Again, this is a conversation that you want to have. I'll put an asterisk by personal property because there is something called scheduled personal property, right? You are scheduling it on your policy. So typically, specific things within the policy may have limits, like jewelry. Most policies, well, a lot of policies I see have like a $10,000 limit for jewelry. So although you may have $120,000 worth of personal property protection within that policy, it may specify limits on specific items. And so when we run into things like that, if you have a $30,000, wedding ring, right, and you need to schedule that because God forbid that wedding ring is stolen, the most that will pay out is that $10,000 limit unless you have it scheduled for that full 30,000. And so we need the appraisal or a receipt from where you purchased that item, and you're able to put that item on your policy specifically to make sure that the total amount is covered. And there's a separate premium for it. It's usually not a lot, honestly. I would certainly look into scheduling items that you have guns, antiques, um, sometimes golf clubs, some furniture, art, jewelry, furs. These types of things typically need to be scheduled because they will have a limit on the policy. And if you have a lot of those things, you want to make sure you have the coverage that you need. Just like we were kind of talking about the unscheduled wedding ring worth 30,000, God forbid someone breaks in, they steal it, we file a claim. We are now looking at the max for your $30,000 ring being a $10,000 payout, which is better than nothing. But for a few extra dollars, you could have covered the full $30,000 scheduled item had we just taken the time to cover it properly. So have a conversation, personal property, the things inside of your home, more specifically, high value items. You need to have a conversation about scheduling those items on your policy so that, God forbid, the time of a claim, you're actually getting paid the total amount for that item and not being restricted by a policy limit that may be in there. So have that conversation, right? Personal property is also evaluated ACV or RCT. So you usually have to endorse it. The policies typically come with ACV on personal property, and then you endorse it to include replacement costs. This is a conversation you want to have. Do you want depreciation being taken out of the payment for your personal property? So the same as with the home. What will it take to replace it versus what will it take to replace it minus depreciation? Right. And so having those evaluations and knowing which kind of evaluation your personal property has is important. Replacement cost is always suggested and recommended. And so, that's just a conversation that you want to have, right? The last thing we are going to talk about tonight is our deductible. All right. So deductible is the amount that you are responsible for at the time of the claim before the insurance carrier kicks in with the rest of the coverage. All right. Typically, a homeowner's policy is going to have a 1% deductible. So if we have a $200,000 home, the amount you will be responsible for paying is about $2,000 if you have that 1% deductible in place. Compared to the auto, it's really not too different. Honestly, when we look at it, if you have a $50,000 car and a $500 deductible, you're paying 1%. As your deductible amount. So when we look at homeowners, it's about the same ratio. Of course, the higher the deductible, the lower the premium. We talked about this in one of our previous videos. But if you have a 2% deductible, right, and you're paying $4,000 at the time of the claim instead of $2,000 at the time of the claim, then your annual premium will be lower because you're willing to take on more responsibility at the time of the claim. Your premiums that you pay to the insurance carrier will be lower than if you were to take on less responsibility, right? Deductibles usually are a little different, right? So we have our wind and hail deductible. That one is usually definitely a 1%, especially in Texas. We also have our all other peril deductible. So anything other than wind or hail. Often you can get that one a little lower. Sometimes we can do 1,000 or 2,000 depending on the carrier, but they can be different. So you can have a windstorm that affects your home. On that $200,000 house, you may have to pay 2,000, and then you can have a pipe that breaks. And causes damage, and you only have $1,000 deductible. So depending on what type of loss it is, can make a difference in how much you pay for your deductible amount. The last one is like a named storm deductible. Sometimes places that are close to the coast are close to large bodies of water will have a separate deductible for named storms. Obviously, it's very likely that they would have those types of claims, and so the deductible tends to be a little bit more and tends to be different. In Dallas, where we are, or Richardson, DFW area, we typically do not have a third deductible. It's usually just going to be your wind and hail deductible and then your all other peril deductible. But in some places, we do see that third deductible come in, maybe called a cyclone deductible or maybe called named storm deductible. They can have different names depending on the carrier, but typically that's what that third one is. All right. So that is all we're going to cover tonight on the homeowner's policy. Please feel free to leave any questions or comments or give us a call, 800-513-4929. We love the opportunity to earn your business.